Janet, at what juncture, RBA, my conversations with Kerry Craig at JP Morgan this morning were, it was a very domestic affair. It was much more a domestic affair for the rate cut than it was a global affair. At what juncture do we move to talking about the PBoC and rate cuts?
On the PBoC, obviously, we do expect further easing, both monetary easing and fiscal easing. And the work done by our China economists suggests that the impact of the trade tariffs already imposed will trim Chinese GDP growth by between 0.3 and 0.5 percentage points. And that kind of an impact, we think that they can broadly offset by a degree of monetary and fiscal easing. For now, we think primarily increasing the availability of funds, so it'll be more reserve requirement cuts. But if more needs to be delivered, then absolutely the prospect of rate cuts could come back on the table, but we're not forecasting them at the moment.
So with Australia as well, and of course we've just moved on to the PBoC too, it wasn't just the global backdrop, but let's talk about trade and answer the question why better US and China GDP has not been lifting world trade.
Well, I think the GDP figures in the first quarter of this year took a lot of people by surprise. Initially there were expectations that US growth would be worse. The headline GDP was very good. Chinese GDP stabilised. Japan GDP was my favourite. It grew 0.5 with nearly every single component of GDP actually contracting. And even Eurozone GDP grew, but a lot of it was inventories or net trade. The domestic picture has not been supporting strong import growth and world trade globally.